If you walked into your bank, been declined, and said you're a B client, see it all the time. You know, hiding some income from CRA in your corporation, nothing wrong with it. But now you want an A deal because you've never missed a payment. You've got stellar credit and lots of equity. It doesn't work like that. It works on confirmed income. So you can't have your cake and eat it too. Don't claim the money and get an A mortgage. You can claim the money, get an A mortgage. Sometimes we can use retained earnings or net income in corporations to still get you that A mortgage, but sometimes we can't, and there's nothing wrong with it. It's a strategy, it's tax savings, it's a tax strategy. You got to do the math to see whether it makes sense or not. It has nothing to do in some cases of whether you're, paid on time or haven't paid on time. Obviously, B mortgages, there are some for bruised credit, but there are also tax reasons to take a B mortgage. I'll give you an example. A couple of weeks ago, we had a client, $2.5 million renewal with Equitable, walked into a bank not in our channel. I want an A mortgage. The bank said, listen, if you claim seven figures, we should be able to get you that A mortgage. Client hadn't claimed much in 2023, so they said he needed to claim seven figures in 2024 to have a 2-year average that works. Client did it, paid tax, almost 50% tax, almost $500,000 in tax, just so he could save 1.25% on interest. And what happened? The bank said, oh, your 2-year average there's too much of a variation, we can't do it. So the client paid $500,000 in taxes, didn't get the mortgage he wanted. They didn't do the math on the renewal. It was $100,000 difference in interest for over 3 years between getting today's prevailing A rate versus the B rate renewal. Got to do the math. It's all about taxes. It's all about strategy. It's not whether you're an A client or a B client. There's no prize for being an A client. There's a prize for being smart. So when somebody says B mortgage, if the math is right, the math is right. That's what we got to do every time. So just keep that in mind when next time somebody proposes a B mortgage. Sometimes it's just about tax strategy. It's not about you as a borrower. Keep that in mind. Have a great day, everyone.